Okay, here we have the USDJPY, and the aim of this video will be to produce a outlook for all the yen pairs, right? So we're going to be looking specifically at all the yen pairs in this video, and I'm going to be discussing the USD against the yen. I'm going to be looking also at GBPJPY, and I'm also going to be looking at EURJPY as well. So these are the three markets that will be considered in this video. So this is a general outlook for the yen against the three major currencies: the dollar, the pound, and the euro. So here we have the euro yen to kick things off, right? So here, this is the weekly time frame of the euro. This is the USDJPY pair, right? So here we have the USDJPY, and this is the weekly time frame. So we started here on the weekly time frame, and we're going to be going over a quick higher time frame outlook, right? So there isn't much really going on the USDJPY, simply because we've been bullish on the weekly time frame for a very long time. So the only thing that you want to establish here as an analyst and as somebody who's giving you an outlook is simply that we had the all-time high, the previous all-time high over here. So this was our previous all-time high. Now, what's happened is we've had a break of structure to the upside. So we've seen this high get broken just over here. So officially in the last few weeks, we've seen a bullish break of structure to the upside. This here indicates the fact that we are longer term bullish on the weekly time frame because we have weekly bullish structure. If we zoom into the candles here on the weekly time frame, what we see is we see large impulses to the upside. So we see bullish imbalances being left unfilled, right? We've seen the last few weeks and even the last few months, actually, since the beginning of 2024, we've just seen the market break higher and higher, and we've broken the all-time high to the left over here. So going down to the daily time frame now, we can begin to dissect some of our structure in more detail. So what we have here, right, to bring ourselves to the most recent switch of structure, we had bearish structure at this point over here, right? So we had bearish structure down to this low over here. So the low that you see, which I'm going to label black for the purpose of this video, this here is the last daily low before we had our change of character to the upside. So what do I mean by that? So we had a series of lows and lower lows and higher lows and lower lows. So what we had over here is we had price giving us a low, a retracement, another low, a retracement. Now we've had that low over here, which I previously established before breaking structure, giving us a high and low over here. So this is essentially how I'm looking at the markets currently. So this here can be signified by a simple break of structure to the upside. So this here gave us our break of structure, right? So this here is our break of structure, right? Very, very clear structural mapping. Again, using the concept of a break of structure, right? So we need to understand the fact that we've had a switch of structure down here. Boss. Okay. Now, since then, we've just been heading higher and higher. So currently, the bullish structure that I have has not really slowed down. Again, we had a high over here that printed, and we had a low down here that printed, and we had a high up here that printed. Okay. Now from here, a couple of things to point out is the fact that once we have a dealing range, right? So we have a swing low down here and we have a swing high up here. And so because of that, we naturally want to project the Fibonacci tool from the swing low up to the swing high. So what we've had over here, very important to note, is that we've had a high and we've retraced into a discount below this 50% level over here. So just to make that clear to people, if I bring this more so to the right, this was our 50% level of the range. So notice how we've come into a discount, right? This has come into a discount just over here. So this is a discounted low in price. And now since then, what's happened is if I get rid of the fib tool, we've also had another break of structure to the upside again, signifying the bullish intent of the market. Okay, we've had a break of structure to the upside. Now from here on the daily time frame, what can you expect? Right, you need to understand a couple of things, right? Overall on the weekly time frame, we are bullish, but on the daily time frame, we need to understand a few things, right? We had a break of structure over here. Once we've had a breaker structure, what we can do is we can reasonably at some point anticipate somewhat of a correction, right? And I'll give you an example of where this has happened. This has happened over here. So we had price break structure and we've had a correction over here. So price corrected. So now that we've broken structure over here, price is well within its rights to now correct. So we could see price come down into some sort of inefficiency, whether it's around this level, whether it's around this level, right? We need to understand that even though we are bullish overall, I want to reiterate, we are bullish overall, but we could expect a correction in these levels over here. So this could have potential correction, right? Potential signs of correction. Potential signs of correction. Very important to understand. Potential signs of correction. Now, if we go down, we hop down to one more time frame, we can begin to dissect the 4-hour structure as well. So the 4-hour structure paints a similar picture to that of the daily time frame, right? Notice how it's actually identical, actually. So what we've had over here is we had the 4-hour shift structure just over here back in December of 19. So this is our 4-hour breaker structure, very similar to the daily time frame, which is not a surprise. And now from here, we've just had price continue higher and higher and higher. So from here, looking at how the candles behaved last week, there isn't really any signs of any potential correction right now. For us to have a correction on that daily time frame, remember the daily time frame is above an old high. So we have an old high over here. We're currently above that old high. And so because of that, on the 4-hour time frame, we would need to see something like this. I would want to see something like this, right? We want to see a 4-hour chalk and then a confirmed structural break. So we want to see a chalk, which I'm going to mark out with the black line over here. And then we want to see price break structure permanently to the downside before giving us that daily correction, right? Before giving us that daily correction, we want to see the 4-hour show its hand. So this is my overall outlooks on the UJ pair or the USDJPY. Overall, the intentions are bullish, right? Bullish overall. Now let's go down to the second pair, which is the GBPJPY, right? Let's begin our analysis on the daily time frame, right? So the daily time frame for this pair again paints a very similar picture, right? We understand that we're dealing with bullish structure in terms of the territory of this market, right? So again, we understand we have a low down here. This is how I'm marking out the GBPJPY structure. So I recommend people just follow along with this, right? So what we had over here is we had a high over here that produced this low, right? Sharp move up, sharp move down, something I've reiterated in another video. So we have a high here, we have a low down here, and then from there we have a high up here, and we have a low down here, high, retracement down to a low, right? Notice how we're having healthy correction in the market. And now we've had shallower correction in the market, right? So I still consider this to be structured. So we have a high just over here, right? So we've broken this high over here with the body. So we have a high, a low, and now we have a high as well. So this is how I'm currently looking at the GBPJPY market structure. Again, if we go down to the 4-hour time frame, because we haven't got too much on the daily to work with, my 4-hour structure mirrors the daily structure as well. So what we've had over here, if we analyze the daily range, the daily structural range, we have 2 points you want to deal with. We have a swing high up here, and we have a swing low down here. Now, because of that, once we've established the high and the low, the next thing we want to establish is the dealing range, right? So I'm going to write this down on the right of the screen, sorry. The first thing we want to establish is the structural highs and lows, right? We want to establish the highs and the lows, right? Highs and the lows. The second thing we want to reiterate is the idea of a dealing range, and I'm going to go over what that is, right? We're going to be going over a dealing range. And the third thing you want to identify, which is going to be after the dealing range, is you want to identify your areas of interest or your POIs. So these are the 3 things that we're going to be looking out for on the chart, right? These are the 3 things: highs and lows, dealing ranges, and POIs. So with that being said, now that we have the high and the low, the next thing we want to identify is the dealing range. So it's very simple to pick the dealing range. It is essentially the high, the low to the high, or the high to the low. And we want to project the Fibonacci tool from that swing low up to that swing high, just like this. And so because of this, what we have over here is we have a discount and we have a premium, just like this. We have a discount and we have a premium. And so just from this, not just from this data alone, just from this analysis, we can really begin to depict a lot of things on the chart, right? So we need to understand one thing. We've had a break of structure, right? Just like I reiterated on the last pair with UJ. Once you have a break of structure to the upside, so once you have this market break of structure to the upside, what you should expect is that you should expect a healthy correction, which is what we've had over here. We've had a correction down. We've seen price retrace down after breaking the structure over here. Right, so after this structural break, we've had a retracement. Now from here, it's important to understand a couple of things. Where are the POIs? Most importantly, where are the POIs? So what makes a POI is that it has to leave a fair value gap or an inefficiency, right, below the 50% level. So notice how this is the equilibrium over here. This here marks the EQ or the equilibrium. So anything below the equilibrium becomes an area of interest or a point of interest. Let me explain. So what we have over here is we have two inefficiencies in the discount. We have one over here, which I'm going to label in blue. This is an inefficiency. And this here is also an inefficiency. So we have two inefficiencies, two fair value gaps, right? We have one over here. This is a fair value gap. And this here is also a fair value gap. So we have two fair value gaps here in the market. And so because of that, these become areas of interest. So you draw your POIs like a lot of smart money concept traders do. It is essentially the last candle or the last range prior to the imbalance, right? Prior to the imbalance, it is the last candle prior to the imbalance. Important to understand this. So this now becomes a 4-hour point of interest or a 4-hour POI. Very important, right? So we have a POI over here that price just missed. And we also have a POI here just below in deeper, more firm discount. Just over here. Again, it's that last candle or the last wick prior to the up move. So we have the 4-hour POIs marked out. And so the last thing we want to identify is the areas of liquidity and what could happen next. So currently on the GBPJPY, we are hovering just above the equilibrium and we are in the premium. So this is technically the premium, okay? This is the premium. And so what does the premium actually tell us, right? The premium tells us that we could see sells down into this kind of region over here. We either bounce off this POI or we could bounce off this POI. So these are the two potential scenarios that we have in the market, right? Okay. Now we also have a reason for higher prices as well. And the reason for that is because we have a very, very large pool of liquidity just over here. So we have a trend line or equal highs just over here. So we have a very large pool of buy side liquidity resting from the previous week. So we had this starting on the 10th of April, time of recording is 22nd of April. So the majority of April has ranged and it's produced a ton of buy side liquidity, right? So this is buy side liquidity. This is buy side liquidity. And what makes this buy side liquidity is simply because it's, well, there's liquidity resting above it, buy side liquidity. So overall on GJ, we can see price eat this liquidity, bearing in mind we have discounted POIs to target. We have one here and we have one here also. So this is the overall outlooks on GBPJPY. Okay. Now, last but not least, we have the euro yen. So if we start on the daily time frame, the daily time frame again paints a very similar picture. All of these paint a similar picture. They all show signs of strength against the yen. Okay, so what we have over here, if we mark out the most recent daily structure, is we have price that's given us the following structure. So we have a high over here that's printed. We have a low, we have a high, we have a low, we have a high. We had a retracement, but did this wick close below this last low? We had a sweep of liquidity to the downside, right? And now we've just seen a break of structure to the upside. right? This is currently the simplest way that I mark out my structure. There are some intricacies on the lower time frames, but I won't be going into that for the purpose of this video. But what we have over here is we have very basic bullish structure on the daily time frame, giving us a high, low, high, low, high. We had a low down here, retracement, sweep of liquidity because we hadn't seen a strong close below. And now we're just heading higher. So what we've had is we've had the last high over here. So this was the last all-time high to the left. And we've seen a firm break of structure to the upside. So this here gives us our break of structure to the upside, right? Yes, break of structure. And so from here, when we just break a high, again, this is very important to understand, smart money concepts, right? When we just break a high and we're here in this region, right, we often don't get a retracement at this level. We often head higher before getting some kind of retracement, and then we head higher again before getting some kind of retracement, right? So we need to understand the way the market works. The market will move up significantly before a retracement, then up significantly before a retracement. So we're understanding the same pattern here in this market as well, right? We've just broken a high, so my overall narrative on this market is pretty much just bullish, right? There's no other way I can say it. We're bullish on the euro yen. If we now go down just one more time frame to the 4-hour time frame, we can also begin to see the same kind of thing, right? So we've had a 4-hour change of character over here. The 4-hour presented us with a chalk just over here in this region. So this here represented a change of character. So this is our chalk, just over here in black. This is our change of character. And now since then we have a dealing range to work with, right? We have a structural low down here, and we have a structural high all the way up here. So now from here, it's important to understand that we have filled the majority of this fair value gap in the discount. So this discounted fair value gap over here, right? This fair value gap, that's discounted, right? Discounted fair value gap, right? That has been filled. Now from here, we need to understand that there's no signs of this market slowing down at all on the daily time frame. This here is a weak high. Currently, as it stands, this here is a weak high. And the reason why it's a weak high is because this high over here has struggled. Sorry, I've not spelled that right. This high here has struggled and has not produced a new low. We've had 2 drive pushes down, actually 3 drive pushes down, but we haven't broken the last low, which is all the way down here. So this high is deemed as weak. And we understand from our previous lessons that weak highs equal liquidity in the markets, right? And so because of that, the overall target is for the markets to get up to this level over here. So I expect the euro yen to get up to 165.361, right? So let's just write that down. 165 or 166, around this level over here. I expect the euro yen to get up here in the near future.